All right. Wake up. It's a Monday. You know we don't fuck around on Mondays. This is a classic sell day, and yes, my price target was reached on a classic sell day, so I did take it off. We use time-based targets and we use price-based targets. Primarily, it's time-based, but you're capturing 300 handles here, so you know, take what you got and be content, be grateful, thank God, and be happy. Okay, I'm going to log out of this account and we're going to go into a demo, so just give me a moment. Alright. Good morning, good morning. Okay, weekly outlook was very straightforward. Everything I said in the weekly outlook is playing out so far for the Monday. The current low of day, this isn't the current low of day anymore, but it was earlier. This is where I took my profit. It was low hanging fruit for shorts, and if we go, I gave this to you in the morning in Discord. That's right to the profits. So I'm not looking at that anymore. Not looking at Asia. Put our kill zones back on. Nice. Okay, so remaining a little bit more on the neutral side, but still bearish, as mentioned in the weekly outlook. However, I'm content with the amount of delivery we've already had to the downside. If we are to turn now and get a retracement up into something here, be it the last week NWOG, be it this NDOG, be it this SIBI, there's a lot of things it could trade back up into. So I'm neutral in that regard. If we can trade up into something like this, then I would still want to see it go lower and complete out a market maker sell model. If we go into a 1 minute chart, we'll look at this a little bit more deeply. What is this? This is the market maker buy model. So once it trades up into the original consolidation or the relative equal highs, we use the smart money reversal from this market maker buy model as the low resistance liquidity for this market maker sell model. So there's two sides of the curve. Sell side of the curve, buy side of the curve, and then sell side of the curve again. So it's sell side, buy side, sell side. The market's always going in market maker models. If you've been looking at ICT's more recent content, he's been doing that and explaining it a lot more explicitly. So yeah. So neutral this morning in terms of where we may reach into immediately at the open, but still bearish. Morning morning Haroon, doubly dropout. Okay, you want to see this close underneath and let that be a bearish order block, but because it's an intermediate term low, because it's a low that rebounds the gap, because we've traded down below it, we want to see it displace below it on, say, a 5 minute chart at the open. That would be ideal for sells, but again, we may trade into PD arrays up here and stuff. If we look at this through the lens of an implied range, which I'll do. Let's do a 15 minute chart. So from this high into where is our expected target? Well, it's this low. So this low. This is an implied range because we're not looking at it because it's taken at the sell side here and then the buy side there, although it is a dealing range in and of itself. It's also where the impulse pricing has begun and where we're expecting it to go. So with that in mind, let's put these quadrant levels on. And we want to see breakaway gaps form in the upper 25%. Has that happened? Yes. One here. That's a 15-minute breakaway gap. We've also seen one here. Fair value gap with a volume bounce. We've also seen one here. So that weakness, or yeah, that indication of leaving these breakaway gaps, it indicates weakness. We're failing to fill in an inefficiency that should generally be a draw. So if we're going to be bearish, and we're going to be really heavily bearish, we're not even going to want to fill these in that upper quadrant. Now this looks like it's already completed a price move, and it has, but relative to where we could potentially look for a trade, because this is a low resistance liquidity, we haven't even reached equilibrium yet. So it's reasonable now that after we've had a tight Asian range, London's gone and Judah swinged them in that opening price. It's distributed very, very heavily throughout London and the London launch and then the pre-market range. Because we're creeping into that equilibrium price point, we may see a little bit of consolidation early on. With the 9:30 open volatility, you never really know. So, because you'll see so many times that 9:30 just runs 100 points or 200 points. But if that's not the case, because we're at equilibrium, we can see it run below and then run back up and then hang around this level for a while. Just keep that in mind. We'll look at this random level as well. Another breakaway gap aligned with the upper quadrant of the implied range. Okay, yeah, if you see this 5-minute candle displaced to the low, it's also going to be a 15-minute candle. That's the most ideal for sells, and then we've got the 15-minute bearish order block that we can use. And then I wouldn't really expect a huge retracement, and I would be looking at this as an impulse price swing. If we create a low here, I would look at this as an impulse price swing and then grade this, potentially see a return to the equilibrium of that, and then trade lower, which may sound a bit of a mouthful, but trust me, I'm a doctor. 25, 1, 3, 2. So we've not actually got a huge opening range. It's going to be about 130 handles-ish, which isn't bad. Smiley face. Morning Lumber. Morning Zach. And isn't this just super clean? This is a breaker block. What's it aligned with? 0.75 of that upper quadrant of the dealing range. And we've got the breakaway gap, we've got the low high, low low. Oops. That's a unicorn setup, second stage distribution in this market maker model. Another random thing in price. The title's epic. Yeah. Okay, that 15-minute candle was a displacement candle through, so I would like this to continue lower, potentially give us immediate rebalance. So if you look at this, this isn't a fair value gap yet. This isn't a fair value gap. So I'll just mark it out as, I don't know, I'll put displacement candle. I would rather see us trade up into this candle high, sorry, this candle low, which is the high of this displacement, and then that would serve as immediate rebalance to trade lower. So it doesn't need to provide you a fair value gap all the time. Sometimes it's not gonna. And in those situations, what do? We can look for other things like order blocks, mitigation blocks, breakers, displacement, and then see if we can immediately rebalance that. Because we're looking lower anyways, and we've traded through the low with a displacement candle. I don't want to see this bullish order block act as a support level. I want to see this run through. So I want to see something that indicates weakness once we trade into this. Okay, we'll see if it gets inverted or immediately rebalances. Midnight open? Yeah, midnight open is here. I assume you're saying that because you mean to trade into the direction of the midnight open, which I understand, but I prioritize the daily profile and technical analysis on where my bias is, rather than just saying I'm looking for midnight opening price to be traded to. Just personally. Reckon red folder news is going to be volatile with the government back open? Yeah. Yeah. Definitely. Yeah, it's back open. Alright, I forgot to put on the opening range gap. Wait, did I do that right? Yes, I did. Okay, this is our opening range gap. If we're bearish, I'd like to see us maybe take out some of these sells, buy side pools and then use consequent encroachment to trade lower. As usual, I'm going to make this green. I'll take this off for now. Okay, first presented fair value gap. I'm going to use 932, not 931. It's too small. Biggest runoff was midnight opening, first presented fair value gap again, so random. So random. Oh, institutional order flow entry drill. Okay, that will be maybe heading into these low resistance highs then. I don't know. I'm not going to predict this. I'm going to sit and wait for a while. We have some low resistance liquidity up here. There's some relative legal highs here. The opening range gap high could be the draw as well. Because we've seen that discount sensitivity, it is likely that we reach into something up here now. I wouldn't want to be on side of buy side because, well, I'm expecting lower prices as we've delivered. So I would want to wait for some kind of manipulation and then align myself with sell side delivery. Maybe inside that 950 to 1010 macro, but whatever you want it to be. Okay. Institutional order flow entry drill. What do I say about institutional order flow entry drill? You take the most recent trader swing, provided it's large enough, and you use it as a fulcrum. And then with that, you go for a one-to-one with the fulcrum as your distribution expectation, not liquidity. You don't even need liquidity when you get institutional order flow entry drill, especially if it's right at the open. So say you entered right there on the first presentation fair value gap, well, the expectation is going to go higher. Institutional order flow entry drill, it shouldn't even trade into the consequent encroachment, but we'll be generous and we'll give ourselves this much room. You can target one-to-one and have the most amazing win rate with institutional order flow entry drill. Like, I mean, I'm talking 80%, 75% just off one-to-one when you're bullish and you get institutional order flow entry drill and you take that fulcrum, you just look at a one-to-one R trade, massive win rate. And you can let it run, or you can be content with your profits, whatever. Okay. I do want to see this act as a stopping point, because if we just break through this, then I'd consider this bullish again, probably. Like overall bullish, not bullish short term. Okay, it's taken out the low resistance liquidity, so every single high here has been cleared through very, very easily. And then I want to see it reject the breakaway gap, which is still a breakaway gap. It's still a breakaway gap because it's just touched and then rejected. It hasn't even gone to the lower quadrant, it hasn't got to the consequent encroachment. It's still a breakaway gap. This was our pre-market high. We've purged that, entered the gap, reached one of our distribution expectations. If we're going to reverse, maybe we'll chill around for a bit and then it will reverse. I would want to see it start slowing down its momentum at least. Plus, if it's going to reverse, when should it be happening? Well, if it's a market maker buy model in a bearish market, it should reverse the optimal trade entry without taking out the original consolidation heights. So this area here. If it doesn't, then it's probably going to clear these highs, and we'll have to wait for something else that validates sell setups. Take that off. Would you still be bearish if the daily candle today closes above last Friday's wick? Last Friday's wick. When you say last Friday's wick, are you meaning the 14th of November? I would assume you're meaning that. Also, let's create this again. The discount wick. if we close above last Friday's discount wick, it would require, I would need to see the rest of today's price action, where it closes. It's not just about where it closes, it's about how it does it, and then what occurs there. If it leaves highs, if it clears highs and then goes lower. So there's probably more than just the daily candle closure that I'd need to give you the prediction on that. But if it does close in Friday's discount wick, that would be the first sign that it's looking like it wants to keep trading lower, yes. Okay. Yeah, you're right. It did touch the upper quadrant and bounce. I know it's done now. Dollar's going up too, which supports the idea of reversal on NQ. Yeah. It's leaving long lower wicks, which is indicative of strength generally. Yes, same story. Rallied off the open at, oh, look at this. Look at this. Lower quadrant of the stealing range. Just a random level. And YM's already begun its retracement. I don't use YM as a barometer either. I don't even look at YM. I ignore it. Still bullish on the dollar, by the way, and it is trending higher, which would support lower prices on the Nasdaq. Although we're not seeing that yet, so it's decoupled. So Nasdaq's a sixth sister in regards to the dollar. That's an SMT above the 830 opening price. SMT with ES and NQ. If you look at the silver bullet mentorship, and you recall what I mentioned on opening prices that day and filtering SMT, the best bearish SMTs are going to be above opening prices, such as the 830 opening price, this one, the 930 opening price, this one, and midnight opening price. And we don't have midnight opening price in alignment here, and market structure obviously takes precedent. So we'll see if this wants to deliver. Okay, the thing is, for an SMT to perform, it shouldn't trade all the way back up beyond like 70% of that downwards candle. So that's invalid, and it's probably going to reach into these relative equal highs and the last week new week opening gap. So no reversal set up yet, but we're not even in the macro, so we're waiting for the macro. It is high resistance for this to run higher now, by the way, because dollar's trading higher. Broken SMT. How do you see a breaker prior to 9:30? A breaker, well, I wouldn't look at anything in this as a breaker because this is just like a bearish consolidation. This is a breaker. You can extend that out. But honestly, use this as an inversion gap. It's better. $9.23, $9.21. Yeah, it's a breaker. Yep. It's also a fulcrum. Cuts the Judas link. So you do that. And you do that. Okay, delivered the N-log. This is already further than I would have wanted it to go up if I'm going to look at reversals. So, unless the macro is really evidently the opposite, I'd not look for sells anymore. By the way, if you're trading the silver bullet and you've been through the silver bullet mentorship, if 929, 930, or 931 is or takes the pre-market low, then you don't need to wait for the macro to begin looking for silver bullets. You can start looking for them immediately at the open. We said that a lot in the silver bullet mentorship, the free silver bullet mentorship. Okay, so this is acting as a market maker buy model. If we look at the entire thing, rather than just the impulse swing that we used earlier, and we look at optimal trade entry measurements, if this breakaway gap doesn't just as acting as a SIBI let this trade lower, then any ideas of reversing from this point goes out the window. And you can either look for some kind of setup that goes into the highs, or you can sit on your hands and accept that you missed the move, which is what I'd recommend you do if you're not already in it. Is it a market maker buy model? If we measure the downswing, it consolidated exactly at equilibrium. What is the best way to anticipate a market maker model or an optimal trade entry? I'm not sure I understand what you mean. Is it a market maker buy model? If we measure the downswing, it consolidated at exactly at equilibrium. What is your best way to... I don't understand the question. Which downswing are you referring to? Which equilibrium are you referring to? Yeah, just those two. If you mean when will the market maker model behave as you would expect it to and take out the original consolidation, in a market that's primarily bullish and you have a market maker buy model, you should expect that to take the original consolidation. But in a market that's primarily bearish, you shouldn't expect it to take the original consolidation. You should expect it to react to a premium array inside of the 62% and 79% retracement level. Typically, it's going to be 70.5%, which is a sweet spot for optimal trade entry. If you have a bearish order block or a bearish value gap there, usually it will reverse from that point. That's why I'm highlighting this as, because I believe from a weekly and daily perspective, we're in a bearish market. And I'm looking at optimal trade entry from the original consolidation highs down to the low where we have the smart money reversal occur. The sweet spot of that optimal trade entry level is this 0.705. That's why I've got it in orange. Is there a premium array aligned with that? Well, there's two highs and there's a breakaway gap, which is still a SIBI, but at that moment is a breakaway gap. Now it's been returned into, it's a SIBI. So if it's going to be bearish, and I'm right on that bias, seeing it trade lower, then from here it should trade lower, like undeniably, because in the macro, and we're at 70.5% retracement level. If it's going to be bearish, I'm not saying I am bearish anymore, because we've already traded through and inverted many premium arrays. But from a daily perspective, or that is saying the weekly outlook, I'm taking the approach of this SIBI and this daily inversion fair value gap delivering lower. Now, we can still see an up close candle today and a down close tomorrow, which completely inverts through all of this. It wouldn't invalidate anything. But from this current perspective, we've traded down from the high of the day over 300, almost 400 handles. A retracement on that is reasonable. A retracement into optimal trade entry can happen, and that's where we are at now. And obviously this is not the best. You would want it to stay below equilibrium, maybe tap a little bit above it, maybe go into 62% retracement and then use that to trade lower. We're at 70.5%. If it doesn't reverse here, then it's going to go into original consolidation. Do you think today might be a classic sell because London is high? Yeah, today is a classic sell. I was in a classic sell day trade earlier. I showed it right at the start of the stream. Are you not in Discord? Because I showed it in Discord as well. Yeah, I showed it in Discord as well. From the London high to 9:30. I should have read it. Yeah, that's what I was looking at anyways. Okay, you know that like 3 PD array, last line of defense things? Let's go back. That's 3 PD arrays. NDOG, NWOG, breakaway gap. If it doesn't use this breakaway gap because it's at 70.5% of the range from this high to this low to trade lower, then it's just going to deliver a market maker buy model into these highs. But if not, then we're Gucci. How do you decide which three to use? Which three what? Which three what? Well, three PD arrays for the trailing stuff. Just the most obvious ones, I guess. I mean, these are 15-minute arrays from, you know, it's a 1-minute chart, but this is a higher time frame dealing range. That's why I would use these. But say you're using silver bullet and you were looking for a stop loss, you can frame a lot of PD arrays in this one little window and say this is a fair value gap, this is a fair value gap, this is a bullish order block, this is a fair value gap, this is a fair value gap, that's a high, you know. You can do that, and that wouldn't work because then every 3 candles would have like 5 PD arrays in it. You look for where's the obvious displacement inefficiency. Okay, that's if I'm in buys. That's 1 PD array. Okay, what else is there? Well, there's this breaker. That's 2. And what else is there? What's obvious? Well, there's an inversion gap. It shouldn't trade below that. So I'll use this, and that would be my 3 PD array stop loss rule thing, if that makes sense. 10 AM may give us a reaction lower. Yeah, that's what I'm aiming for, because optimal trade entry of the market make buy model, if it's going to reverse, it's in the time window, 9:50 to 10:10, and it's at the correct point in price. So if it doesn't reverse here, then it just completely invalidates sells, and it's going to look for buy side liquidity or SIBIs that it can fill in on the upside. In the hourly chart, it is around a bearish breaker, which is at the same level as optimal trade entry. In the breakaway gap, it's a confluence for a reversal. If yes, how do you take an entry as a short? Bearish PD raise plus SMT. Wait, I don't understand. An hourly chart. It is around the bearish breaker, which is the same levels as optimal trade entry. Breakaway goes according to the reversal. If yes, how do you take an entry as a short? Bearish PD raise plus SMT. I don't understand the question again. Sorry, model. I don't know what you're asking. Do you see a bearish break on the hourly? Yes. This. But it's not been closed below, so this. That's my hourly bearish breaker. This plays through. Yeah. 1 AM. Yeah. Oh, you mean this is a breaker which is aligned with this breakaway gap. So how do you take an entry on it? As in that breaker block. I like that we left this swing high there in the SIBI, and then we've rejected it on the hourly chart. That's ideal. Let's go to a 4-hour. And the 4-hour has done a very similar thing, but it does have a bullish order block and a busy to support it, so which we've already done wick downs. Annoying, very annoying. Make these dark blue. Yeah. Well, because we're in, well, you can just employ a 2022 model. We can just use a market structure shift and fair value gap entry. Very simple. So I want to learn, how do you take a HP entry, which confluences, what's HP? Which confluences do I use? Well, me personally, I use a million things, but you can easily, a high probability entry. Well, you can use opening prices, you can use S&T, you can use whether or not we're in low resistance or high resistance conditions. All of that would would contribute to making your trade higher probability. But that alone isn't going to take you anywhere. You need to have the narrative, the idea of why it should trade lower, and then you just get in sync with that. So if you're expecting lower prices, it's very, very easy to get in sync. The only hard part of actually trading is predicting where it's going to go. If you can predict where the market's going to go, and 60% of the time you're right, you just need to position yourself in a way where you're at a 1-to-1 risk to reward or above. And if that's going to deliver 60% of the time, you're profitable. It's simple, but it's the truth. The entry is the least important part. Predicting where it's going to go is the hardest. The entry is the least important part of your trading. The least. If it's going down here to this low, that, and I know that, I can enter anywhere. Anywhere. As long as I'm in like premium, I'm not selling in a discount, because if I'm wrong in the discount, I have to adopt a much larger stop loss, and we don't be doing that. Predicting where it's going to go is the only hard part of your trading. Entries are easy. High probability entries revolve around, have you got conviction in where it's going to go? Because if you have conviction in where it's going to go, you can enter on a turtle soup, and you can enter on a 2022, you can enter on an inversion fair value gap, you can enter on a market structure shift. Then if we displace the market structure shift, you can enter. If we don't displace the market structure shift, but we do trade above it, and then we seek a short-term premium, if it's a bearish market structure shift, you can sell on that. Like, the entry is the easiest part. If you have an S&T, and that S&T creates a fair value gap and a market structure shift, and you're bearish, and the dollar's bullish, you can enter on that. Yeah. That's such overlooked advice, draw being more important than where one enters. Yeah, exactly. As I know, it usually makes a short-term high, and then it takes a reverse, or sometimes it displaces, which uses a 2022. Yeah. If you're bearish, you want to see manipulate some buy side. Here's the buy side. Has it manipulated it? Yes. Is it in bearish PD arrays? Yes. Is it a lower intermediate term high than the previous higher intermediate term high? Yes. Has it given a market structure shift? Yes. Has it given a fair value gap? Yes. Has it given an entry? Not yet, but you don't even need a fair value gap to enter if you're convicted in your draw on liquidity. If you were to take an entry now, what would your target be? Long-term target, consequent encroachment of previous daily wick. If I was to take an entry now, what would my target be for the long term? For the long term. Okay, well, if I was looking at a long-term target, I would first have to determine if it's going to reach, or if it's going to behave on a long-term basis, or if I'm looking at something that's going to be a short-term scalp. Now this is aligned with what the ES is doing and with what the YM is doing. There's not really any divergence here, so that's good. What about the dollar? The dollar is still trading higher. It's in a bullish fair value gap. It's got a high that it can trade into. It's given us a market structure shift. So the dollar's bullish as well. And as you can see, it's been clearly uptrending all day. So that's a low resistance environment. If I'm convicted in sells because it's a low resistance environment, and all three correlated assets are in alignment, and the inversely correlated asset is doing the opposite or expected to do the opposite, then that's a low resistance condition that I can say, yeah, I'll look for a long-term target. Now, a long-term target to me, I don't use multiple days. I'm never holding overnight anymore. I don't like the gap risk. But I will use targets on the daily chart sometimes. Like I'll use the current daily low. That's usually a low-hanging fruit, which I used earlier today. Obviously, this is a new daily low, but I can use the current daily low. I can grade the wick from Friday's discount wick. I can say, okay, I'm going to have my fixed TP at the consequent encroachment, but if I see it react bullishly to the upper quadrant of discount wick on Friday, then I'm going to take profit. I'm going to be content with that because it can potentially reverse that, and I don't want to be harmed or in a position where it's going to reverse. That way, even if I'm wrong, I've made money. But if it's low resistance and I have conviction in where it should go, then yeah, I'll hold it to the previous daily low or lots of stuff. This is the current daily low. I would say that's a good target if you're looking to take profit on a sell trade. But you should have already taken some kind of partial if you've been in this, because you had immediate rebalance on the 15-minute breakaway gap. Now, okay, let's talk about this. This is a 15-minute breakaway gap. It's created an inefficiency inside that breakaway gap temporarily because it displaces lower. Then it trades up into what level? It's not a breakaway gap anymore, by the way. It's a regular SIBI. I should rename that. 15-minute SIBI. And it's traded up into that SIBI. It doesn't matter if it's tick-to-tick precision on the consequent encroachment. That's not what I'm looking for. I'm just looking for it to reject something in this and then close lower. That would be an immediate rebalance. And has it done that? Yes. So you could have entered this. You could have entered this. You could enter lots of things. Should we think about 10 o'clock silver bullet now? We take aggressive entry retraced fair value. Well, if you were looking for silver bullet, it should have been doing the macro. You should always look at it from 950, and as you can see today, where's the high created? 950, 952. So that's probably random. Inside the macro, and then it's reversed. That's obviously random. Yeah, but because we had the pre-market low be the 930 candle, if the pre-market low has been taken or is created by 929, 930 or 931, then you can look at it to be a reversion into the opposite end of the pre-market range, which does deliver pretty quickly off the open. And then using that logic, that if this is the low, it's going to revert into the opposite end of the range, you could have taken any kind of buy setup, looking at the pre-market highs, and then if you're looking for the silver bullet reversal setup, this was the reversal of the pre-market range based on the logic that if we create the pre-market low at 929, 930 or 931, it should revert into the opposite end of the range. Okay, that's one thing, simple. What's the next thing that's going to happen? Well, if it's reversed, it's got buy side liquidity, it's used the sell side as the low from the pre-market low being 930, and then it's reverted into that range. So this is a reversal setup because it's created the buy side. It is the sell side, which has manipulated the sell side, and it's reverted into the buy side. So that's silver bullet buy. There can be multiple silver bullets in the same session. So what happens next? Well, it continues higher inside the macro, which is the time that I give you to look for the reversal setups in the silver bullet mentorship. It reverses. You can sell the first PD array that signifies weakness. Now there isn't a lot in here because it's wicking, it's wicking, it's wicking, it's wicking. And then we have the immediate rebalance off that 15-minute SIBI. You could have entered that. You could have entered on this gap here. Very short, but I would say it's a little bit late to be looking for entries now. 10:03. 10:04. Again, it's late to be looking for entries now because, look, if we look at this individual price swing, where are we in relation to it? I'll make this darker. We're in discount. it's showing discount sensitivity right now, which isn't a sign that's going to completely revert. But you want to be selling it in premium. So if you can get entries now, potentially you can take them. But you know, no advice. It's a very back and forth market today, so you want to be careful. 10 o'clock, 10:03 is the first percent fair value gap after 10 a.m. because I always like to take the late entries. Fair enough, and it's giving you that entry. But if it's already rejected from it and it wants to return into it, it's a bit of a weaker entry once it's returned. Because if it's going to be bearish and it's late into the move, it shouldn't have displaced this far and then want to trade up all the way back into an inefficiency. If it's going to be bearish and you're looking for a late entry, your risk to reward ratio is slightly askew. So you want to be not seeing this filled in again. Once it's traded into from this point, that's the wrong one. At this point, you don't want to see it return into it again. Now, I'm not saying it can't return into it and still deliver lower, but in the trades that you want to be in, the ones that deliver fast, it won't even deliver this. If you're entering on the second retracement into the fair value gap after it's already displaced away from the fair value gap, you're putting yourself in a very not very low probability, but it's a lot lower probability than you want to be, because if it's displaced this far, you don't really want to be looking for it to trade back into the gap. It should just drop. Nothing can stop it, super bullish. Okay. I mean, if you are doing silver bullet, again, taught in the silver bullet mentorship in the trade management video, you always have something coming off at or around equilibrium. So there should have been something off here. I did say, take something off. Because with silver bullet, especially if it's the second silver bullet of the session, like you've seen one, and you're seeing another, it can reverse from optimal trade entry. Because it's a market maker model, it can reverse from optimal trade entry. Price touched the bullish order block and didn't even touch the first percent fair value gap with these signs of bullishness. If you have a reason to trade higher, then yes. Do we? Well, I want to be bearish. Maybe that's my desires. Yeah, you're right. I submit to that. Okay, well, we got our short-term reversal inside that macro. Must be random. You can hold, but I would have taken something off when it entered discount at least, and then now I'd probably be at break even, and if it hits you, it is what it is, and I wouldn't try to re-enter it. That advice will save someone from blowing their account today. Although it's not advice. I set my stop loss at 21.5161. Oh, 25.161. Stupid. 25.161. Okay. My entry was at 25.198. Okay, nice. Real nice. Have you taken a partial yet? I hope you've taken a partial. Please be bullish, such that my stock portfolio will not be completely screwed. Oh, we have diametrically opposed opinion. I want to be bearish. but yeah, it's bullish. I just don't like all-time highs or being anywhere near them, which we're not that near to them right now. It's been a weird year, like such a weird year. I mean, the start was good, and then everything else beyond that, like up until that Trump tariff news came out, we had some of the worst price action we've ever seen, like on the daily chart. No, intraday, but none of these were predictable candles. None of them. It's 10:14, a swing high and trade lower, so we can short as opening and closing price. Is that tapering practice? Yeah, it's tapering practice. It's 10:14, a swing high and trade lower, so we can short opening and closing price. What makes you think we can short the opening and closing price? Oh, are you in private mentorship? That's for classic buy sell day. You don't really want to do that on like a 1 minute basis. I would if I was trading futures, but currently entered on CFD. Oh, you can take partials on CFD too. If you're in 5 lots, for example, you can just take 1 lot off. Like you just buy back 1 lot, but don't actually go and execute a buy order because it will do it separately. You need to edit the position that you're in and then reduce the size. So if you're in 5 lots on the Nasdaq on your CFD account, it depends on the platform you're using, but say it's CTrader, you can click on it, you click edit position, and then you change 5 lots to 4 lots if you want to take 1 lot off, and then it'll take 1 lot off for you. What about when the VIX is over 20? It said that price is more algorithmic. I have no idea about that. I don't think that's true. As T said in 2024, we can take an entry from a swing high or low from the side of fair value gap or order block. Yeah, of course, but I thought you meant power of 3 when you said opening and closing price. The account's retarded. I entered the smallest lots. Taking a partial will be meaningless. Oh, is that DBX? It says no fun in the large slot. I can trade 0.2. Oh, I get it. Fair enough. Yeah, also. If you're in a sell and you took that as a silver bullet, well done, I'm proud of you, man. I am proud of that. My student. Wait, so you said ICT said in 2024 we can take an entry when a swing high or low forms inside a fair value gap order block. It's more than that though. Are you bearish? Are you bullish? If you're bearish, then yeah, you take any premium array if we trade into it. If you're bullish, then you wouldn't do that. But the way you said it, looking at the opening and closing price, I assumed you were meaning regarding power of 3 concepts, not swing highs and swing lows. I didn't know that's what you're referring to. Got stopped out from sell from earlier, but I entered again on silver. Wait, how did you get stopped out? Oh, wait, from the morning one. Yeah, I remember that. Although I did tell you to take it off. Wonder why. Trading stuff. Yeah, but didn't you just take the full thing? What are the reasons when we have a good portfolio in demo but not in real account? How to fix this? Yeah, you should have. What are the reasons when we have a good portfolio in demo but not in real account? Oh, you mean like your trading results? Well, I can't just diagnose it instantly like that. I need to know more about you. You can trade VIX using ICT concepts. It's on the weekend. I don't know how to incorporate time of the weekend. I don't bother, to be honest. Technically, it's just like you can't trade on the weekend. I don't see the point though. I've never done it. When I started ICT, since then I've never done that. So I can't really advise you. The new dude with the Deadpool pick is insanely good. Who? Oh, yeah, I know him. He is really good. Although I've only seen like one of his trades. Okay, so what are the reasons when we have good trading results in demo but not in a real account, how to fix this? If you can trade in the demo well, you can trade with real money or simulated funds or an evaluation account well. There is no difference in trading ability. The chart's the exact same, the setups are the exact same. There's there's no difference. The only difference is the money you make from one of them is taxable and from the other there isn't. So your trades are not the problem because it's the same charts, it's the same setups, it's the same same algorithm. You're doing the same process, or you should be. What you're probably experiencing is other factors outside of the technical analysis that go a little bit deeper, and we're probably talking psychology issues. It's probably something that you've got where you want to make money and you want to make it now and you want to make it fast, and you overtrade and you over leverage to try and achieve that. Also, keep in mind this SIBI. Actually, no, keep in mind this SIBI. Because, well, if you're going to be really, you could use this spiritual block and stuff. Keep that in mind. Why? Because it's got a displacement candle going through it. It's returned into bodies are respecting the consequent encroachment, so it should be sensitive here. And if it's not, you want to see if it's sensitive to the equilibrium portion. My trading view is not working. Like the buy and sell buttons don't work anymore. If you're on demo account, it's very laggy on demo account. Like, I remember we were trying to do it, and it took like a minute for the position to get placed. So, like, I would click the buy button, it would do the loading thing, and then it would do nothing, and it just takes a minute for it to show up on the screen. The demo, yeah, paper trading accounts, they're very, very laggy like that. What was I talking about again? Oh yeah, demo results. You're probably rushing to try and make money rather than focusing on the good trades. So a fix, put rules in place that prevent you from thinking about anything except for the trades themselves. So if you are familiar with one setup and you're very good at, just choose your best model. Right? You can have multiple, but just choose your best one. And if it's the silver bullet, for example, say, okay, I'm going to take one silver bullet trade a day. I'll be in front of the chart at this time to this time, and then beyond that, I'm not even going to place any positions. I'm just going to tape read. I'm not trying to make money, I'm just trying to take the best setup possible. And then, already, by putting rules in place, there's a system that's going to stop you from falling into unhealthy trading practices, like 5 trades in an hour, or twice your regular size. You have to be prepared for what the markets can offer you, because this is going to happen 3-4 times a week. And when it happens, you want to be prepared and ready with a plan to execute. That comes from knowing what's going to be at risk. So before this happens, before anything in the chart prints, you should already know, is there going to be a setup on Monday? Okay, well, let's look at the economic calendar. Yes, there's a high impact news event on Monday. I'm definitely going to be there on Monday, and I'm going to risk X amount to make X amount, or I'm going to risk X amount and I'm going to look for this type of setup. Because silver bullet, I want to see it trading toward the liquidity pool, but if I'm up 500 before that liquidity pool is reached, I'll take the trade off and I'll be content with it. So that's a form of plan, that's a form of preparation that you have going into the charts. Then you want to also have, what does my setup look like? Well, if I'm not an expert in the setup, I need to backtest it, so I'm very, very familiar with what it looks like, what PD arrays I'm going to see form, which PD arrays do I like that I want to see form in the chart. Whereas, like, you have to be very, very familiar with the setup. That's an element of preparation that you also need to have. The back testing, the forward testing on the demo account. Now, you already said your demo account is good. Like you said, your demo results are good. So your trading is not the issue. The issue is probably lack of preparation on the mental side, because you're looking for a fix to something outside of trading. And look, everyone's been there. Everyone's done that. I've done that. Everyone in this chat right now, if they've traded with the real money, they've done that. They have done that. So don't think that's something to beat yourself up about. You have to give yourself permission to be human. You're not seeing good results in your real money account. Okay, why? Like, where is it going wrong? Is it the trades themselves? Have you just taken a couple of bad setups? Well, then the averages are going to play out, and you might have had three losses in a row. But across 100 trades, if there's a 60% win rate, that's profitable. And yeah, there's going to be three losses in a row sometimes. Or is it that you over leveraged and you couldn't handle the position going against you? You took it off a little bit early, and then it went in your favor anyways. You tried to get back in alignment with it, and you did that with double the size, and then you got stopped out again because your account ran out of money. All of these things, they're factors that I don't know about you, so I can't just come out and give you that one step fix. But you have to identify what's going wrong in your trading yourself. I can't do it for you, unfortunately. Because even if we were to have a conversation and sit down and you were to honestly speak with me, you wouldn't want to say the things that are bugging at you. And no one would, because they're personal. We all have conflicts in life about, things in trading, outside trading, expectations to live up to. And if you want to trade effectively, you have to identify what could be a factor that influences these trades. What's going to influence the silver bullet outside of the silver bullet? Well, am I feeling well today? Did I sleep enough? Am I annoyed from external influences? Am I agitated? Am I sick? Or am I in the perfect mindset and I'm feeling ready? Or am I excited? Because if you're excited, you may be quick to jump the gun and look for entries too early. So, to answer your question, how do I get the same results that I'm getting from demo in real money? Ask yourself, if I can do it in the demo, then the trading is not the problem. What is it outside of the trading, outside of the technical analysis, that's giving me problems? And I'm sure once you figure that out, you can take the necessary steps to eliminating it. Does this sound like well regard, guys? Yeah, I don't know. I do those every week now. Will you ever consider a PM stream once or twice, maybe just for PM conditions? I find PM more slow and trade terribly compared to AM, so a guide would be clutch. If I can figure out how to stream on TikTok, then I'll do TikTok PM streams, maybe. I don't even know how to do it. I tried to figure it out this morning, but I couldn't. Yeah. Or just give up. That's not nice. If you're profitable in a demo account, you definitely shouldn't give up, because you've already proved to yourself how good you are at trading. With a 50k funded account, you said with 2500 drawdown, you can lose 350 per trade, but in opening all the trades usually has more. Then how to manage this? Well, if you're with one micro on a trade and you're on a funded account and you're risking. Wait, Model, are you in? Are you in the paid server or the free server? Because you're saying things as if you're in the paid server, but I don't recognize you. Okay, yeah, so if you can lose 350 per trade, at the open, that's 175 handles of drawdown if you're in with one micro. Now, you don't need a 175 handle stop loss, so you can risk 350 handles at the open. Sorry, $350 at the open without being affected by being over leveraged or not having the lowest possible size where it can affect. I forgot what I was saying. You can absolutely risk $350 at the open. Like, it's not too hectic to do that. You're just trying to put on 4 micros or 5 micros or 6 micros or a mini, which if you want a 50k account, you shouldn't be in one mini. That's way over leveraged. So reduce your contract size based on, like, you have to calculate in advance what you want to risk. Also, you probably don't want to trade the open if you're a newer trader or if you're not profit. Well, if you have a model for the open, like 2025 model, sure, trade it. But if you're just going into the open because there's volatility and you want to risk 350 to make 700 and you're just guessing the direction it's going to go in, you shouldn't be doing that, obviously. Spoken too much. Throat's gone dry. Okay, so what's happened here? Expansion, consolidation, expansion, consolidation. So we're going to look to possibly, it's 1032, see some movement now. It's taken out this high, but it hasn't taken out this intermediate term high. It's made them relatively equal. So if it's made relatively equal, we want to see spooling to create liquidity at these highs for later on in the day or tomorrow or, well, anytime. And this is an intermediate term high. If we're bearish, we don't want to see intermediate term highs taken. And if we do see them taken, it wants to be a very tiny wick. Now, this isn't a very tiny wick. It hasn't taken out the intermediate term high, and it's displaced. So maybe there's an SMT there. There is an SMT there. Wow, probably random. This is the distribution asset because Nasdaq has not taken the high, whereas ES has taken the high. So the more pronounced move is going to be on the Nasdaq. So the sell setups, if you've been diamond hands and you're still holding it, well done. You'll probably get something. Displacement lower into this gap, and it's a breakaway gap. So see if it wants to fill. It looks very weak here because we've got this bounce price range, and we've got a very large displacement candle. It's traded down a little bit below the 14th November's new day opening gap low, which is Thursday's end log. So there's weakness here. So if you're in sell setups, it's good to just want to hold on to that for a while. Don't try and chase price now that I've just said it's weak. It's weak if you're in up here. If you're looking to trade here now, it's not weak for you because you're not positioned. And if you try position, you're just going to get ran over. What's the 2025 model, if you don't mind highlighting it? Yeah, it's a first presentation fair value gap and the opening range gap quadrants. So if you are looking for higher prices and you want to employ at the open the 2025 model, you want to see if we have a premium gap and you want to trade up into it. Depending on the gap size, consequent encroachment of that gap should be your bias. 70% of the time it will reach into that. If you can, for example, see a first presentation fair value gap form at the lower quadrant of that opening range gap, and you're looking for relatively equal highs or some kind of draw upwards, typically it's going to be consequent encroachment of the opening range gap or a full gap closure, then you can take a trade off the first presentation fair value gap and hold it up into the consequent encroachment of the opening range gap if the first presented fair value gap is at the lower quadrant of the opening range gap. So there's a bit of context to it. If you're bullish, you're looking for it to fill into the consequent encroachment, depending on if it's a premium or discount gap, obviously. I can't really explain it in one sentence. Okay, we have this SIBI. There is a bounce price range within this, which I'll highlight in a moment, and we're inside that new day opening gap, which we've displaced below. So if it's going to go lower, it's already weak. It's going to do it here. It's not going to retrace at a high amount, like back into this order block. I mean, I guess it can wick, but you don't want to see it close at all anywhere near this, because it's bounce price range. You want to see it just run away. You don't want to see it like go back up into that. There's the 8:30 opening price. I don't ever look for these to be like support and resistance levels. I know some people use them like, say this is the midnight opening price. They want to see it reject after it touches it. I'm not a fan of that. I don't really care to see use the support and resistance. I use it for discount and premium. So if we displace through the 8:30 opening and then we make a run for it and then we fail to trade back above it, it signals like if you're in a dealing range. Say this is dealing range, and we displace to the equilibrium, and we fail to trade back up into equilibrium. That will be weak. Now replace the equilibrium for the 8:30 opening price. 8:30 opening price. No, it's there. Then it's weak. Same concept applies. It's still a discount and premium gauge, so that's what I use it for. Okay, it has traded and touched the bounce price range. If it's bearish, it should reject here. It's not as bearish as I would have wanted it to be though. Still avoiding the breakaway gap. If it leaves a long wick, it's really good. Yeah, left a long wick. Okay, that would be a good entry. Wow, YM's a chop festival morning. Let's check out the dollar. Well, that's going to be a higher resistance on the Nasdaq because it's had its run lower. It doesn't really matter that much. And then now it's kind of in the 50-50 zone where it's got a PDRA it can react from, but it's also a little bit bearish based on the drop here. That's SIBI, so uncertain on the dollar. I'm not telling you where that's going to go because I don't know. Which doesn't help the Nasdaq in any way. That's why we're getting high resistance conditions. We do have some nice engineered lows here, and then it made that little fake run up into the BPR, wicked away. Body's closed inside the end dog. This is objectively weak. Objectively weak. Let's confuse everyone for a minute. The classic red candles. At the sign of a rejection from a fair value gap or bounce price range, do you recommend a long wick, sometimes a couple of touches to the upper left or lower part intact? For example, if you want to take an entry at the current bounce price range, do you wait for the candle closure or something else? If I'm bearish and I know that this is a fake run higher into the bounce price range, I'll enter it on the bounce price range because I know it's going to be a fake run. So this is premium or like VIP pricing because I know this is bearish. So I know that any move higher, this is VIP pricing for me. I can get in a good price if I'm expecting it to trade lower. Now, if I'm less certain and I think, well, it moves quite fast, it might be actually causing a reversal. There's a couple reasons we're in a bullish fair value gap, or a consequent encroachment of the opening range gap. I can see it not being a fake run. I could see it just running through and displacing and inverting it and trading higher. In that case, I'll wait and I'll see where's the swing point going to occur. Well, if there's a candle wick like this, that's generally
going to indicate weakness, especially if it becomes a swing point and the candle to the right of it, the wick doesn't breach the equilibrium. It doesn't, it falls short of it. So that's decisively weak. Plus, the bodies are closing inside the SIBI, which is aligned with the NDOG, after it's traded up into the bounce price range and rejected from it, which is also above the 8:30 opening price. So this is everything you need for an entry. But what are the conditions? Well, it's chopping around. There is an S&T, which generally should take you out of consolidation. It did temporarily, but we've begun to consolidate again. The weakness factors are there, but the speed factors are not. It's still in a chop, so you have to weigh all of that. Lucky missed the red candle. The red candles are insanely good. I love the red candles. The only reason I took them off is because it confuses people. They don't get it. They're like, what's going on here? Because red's normally down close, but black's also normally down close. So it's like, which one's down close, which one's up? I think it's pretty obvious to see though. Like, I don't know, to me it's obvious, but to other people it's not. Red, green, red, green, red, green, red, green. It's Christmassy, yeah, it is Christmassy. Spider-Man's hilarious. Stick to red. We can stick to red. Okay, that's an intermediate turn high. I don't want to see this traded back into. If we can create a swing point below it, that would be weak. But again, conditions. The entry conditions can be there, like the entry criteria can be there, but what conditions are you in? Is it low resistance? Well, the dollar's not certain right now. The dollar's back and forth. Well, it looks like it may move higher off the suspension block, so that'll be good. But still, it's chopping around. So there you go, that's invalid now. Oh, bullish S&T. Back and forth S&Ts. ES takes these, and Nasdaq doesn't take these. I wish there was a good S&T indicator. I don't know a single one. Because Nasdaq doesn't take them, it's the distribution asset. As we know, the distribution asset is going to have the more pronounced move. And then you can see it does have the more pronounced move. Just going to fade this a little bit. If this order block fails, I'd call it a session and I wouldn't even bother trying to get back in. Because it's been the last line of defense for a while, and if that fails now, I'm not saying like a breakout artist, you look for it to rip through, but I would say it's probably not a predictable condition. Because if it was going to be bearish, it should have ripped off here. It should have just dropped there through the lows. ES did, but Nasdaq didn't. So that's inherently bullish because of the bullish S&T. And then we've broken this high. We've gone through the bounce price range, which should be high resistance if we're bearish. And it's not done that, it's displaced through it. So unless we can see something very, very weak of this bearish order block, I'll just call it a day, or call it a session.
YM is so ugly. Who trades this? Shoots the stream, no problem. Oh yeah, I was meant to say this at the start of the stream. There will be 3 live streams on the YouTube channel this week, and probably for the coming week. It's going to be 3 a week from now on, so I can spend some more time with the private students and give them some more attention. Which days? It would be a good idea if I said that in a... Wait, let me check. I posted it on YouTube posts earlier, but I don't think anyone ever sees those. Let me check. Monday, Wednesday, and Thursday. So not tomorrow, but Wednesday and Thursday. And Tuesday and Friday I'll do private mentorship streams. Yeah. Is a time distortion, how to tape read to find an opportunity. It's more consolidation than time distortion, I'd say, because look how much work we've already done on both sides of the range. We deliver to the upside, we deliver to the downside, we deliver to the upside, and we deliver to the downside. Now these are all very heavy, very fast moves. Fast up, fast down, fast up. It's normal for it to consolidate now. I wouldn't call it time distortion because there's no injection of volatility that's going to come in soon. Time distortion is when you're seeing a delay before algorithmic volatility is injected into the marketplace. It's not the same as consolidation, although it is a form of consolidation. It isn't the exact same thing. So typically you'll see before 8:30. Here's 8:30. If we have high impact news, sometimes we'll range very, very tightly. That's the algorithm delaying price delivery until the 8:30 news candle or news data comes out. Sometimes before 9:30, the market open, we'll see a very, very tight range, and that's time distortion. It's consolidation, but it's more specifically time distortion. At equilibrium of a range, we'll see consolidation normally. So here in this case, here's equilibrium, this black line, and this is where consolidation is occurring. I taught that in the swing grading lecture. For free on this YouTube channel, you're welcome. It's titled Implied Dealing Ranges. Yeah. Or is consolidation just building liquidity on both sides? That is what consolidation does, yes. Fair value gap on dealing ranges, lower quadrant respected. Which dealing range? Did the opening range gap fill within first time it's constant encroachment? Yes, it did that within 1 minute, 2 minutes, 2 minutes, 2 or 3 minutes, yeah. Gold. Sorry, I read that earlier and I forgot to look at it. Gold. You don't really want to use the New York Open. You want to use the New York. Sorry, you don't want to use the New York AM. You want to use the New York Open. So, shit. Shouldn't have showed that. Wait, no. How do I duplicate it? Copy. There we go. Seven AM and 10 AM. You can see the difference here in volatility from the New York Open to the New York Open kills on to the New York AM 9:30 opening bell. So when you're using gold or forex, you're using the New York Open rather than the opening bell. So it's late to say anything on gold. It's like on forex, a silver bullet comes inside the New York
open, not the 9:30 opening bell until 11 o'clock. It's from this point. Same with gold. If this is a consolidation, can we rely on SMT or not? Because it might be relatively equal highs or relatively equal lows. If it's a consolidation, can we rely on SMT or not? Because it might be relatively equal highs or relatively equal lows. I'll tell you what you do. In consolidation, you go to a 5-minute chart, if it's consolidating on the 1 minute, and you want to be really certain that you're not going to get caught in the consolidation. You wait until there's a 5-minute fair value gap. Now, it doesn't matter which way it is. It can't be one tick or a handle or 3 handle. It needs to be a significant fair value gap like this one. And you want to see where does it leave that consolidation. Once it's left it, then on a 5-minute basis, when we've created a 5-minute fair value gap, then you can go back down to a 1 minute and be confident in the fact that it's not going to consolidate, and you can look for entries again. If you are going to be a scalping hero and you're going to take that route, fair enough. I'm not going to sit here and rain on the parade, but you may get caught in consolidation like you would have there. You would have here, completely you would have here. That's like a gem. Well, I have taught it on the YouTube channel for free already, multiple times, so if you go to keys to trading choppy markets, that's on this YouTube channel. It's a free video. It's not in the private mentorship, it's free. So if you go to keys to trading choppy markets, or if you type in Valric, keys to trading choppy markets, it's that video. And that's just around consolidations. So anytime there's a consolidation, how do you trade it? You can go watch that video and find out. Or you can watch the implied dealing ranges lecture, which was done. If you go into, you click the channel page, then you click live, it'll be towards the bottom. It's one of the first live stream lectures I did. You can go there, and it's a little bit advanced. There's a little bit of knowledge required, but I promise it'll elevate your understanding completely. You can grade consolidations and look at the equilibrium and wait until we displace away from equilibrium. And if that's done, even on a 1-minute chart, and it reacts from that level, you can enter there in the direction that you're anticipating it to go. So if, say, let's put it on this black line. If we're bearish, and from the black line, this is equilibrium of consolidation. We displace lower, and then we fail to touch that equilibrium again. That's a good sign that if there's bearish price objectives, and if you're expecting it to go lower, but you're stuck in a consolidation, and you're waiting for it to leave the consolidation, that puts you ahead of the curve. Most people are not going to see it as breaking the consolidation, and you can get into very good trades. And because it's coming out of consolidation, it'll typically move a little bit more explosively, and you get really nice fast movement trades. Civil lectures were really good. Yeah, we did those for like 3 weeks, 4 weeks. We did it 5 days of the week for a month on the YouTube channel for free. There's students that have just used that and they're profitable, which is amazing. Stewie, who isn't here today, but he's profitable just from that, which I'm very happy to say. It brings me joy. It brings me a lot of joy. So was when you joined. I got a lot of new subscribers from that, actually. Yeah, got a lot of new subscribers. The way I first blew up, I say blew up like I'm not seeing on 400 subscribers, but the way because I got to 100 subscribers in like a week, was from Reddit. I was just posting about my pre-market model on Reddit, and then people liked it, and I created a Discord server, and they just joined the Discord server. I didn't even advertise it, they just clicked on my profile, and they went to the Discord server.
which is probably how half the people here joined. And then I got banned from Reddit, but my YouTube channel had already grown to 100 and something. And now I'm on X and I'm on YouTube. And that's all I'm on. And Discord, obviously. Banned from Reddit. Yeah, I got banned from Reddit. I don't know why. They said vote manipulation, which is like I'm using bots to upvote my posts. But it wasn't me like using bots. It was that everyone who had been looking at my posts, they would like see that I posted and just upvote straight away. I think, I don't know. So then I got done for vote manipulation, and it's a permanent ban because it was like the third time that I had done vote manipulation. I hadn't done vote manipulation. I wasn't telling anyone to like them. It's just my posts on that Reddit server, which was titled like r/inner circle traders. My posts, every time I posted them, within like an hour, they had triple what everyone else's had, and I wasn't promoting them. I wasn't telling people to upvote them. They were just getting the upvotes naturally, and that's apparently vote manipulation. So I got banned from Reddit permanently for that. I don't know why. I've been famous. Yeah, it's hard. It's hard. uh, okay, that could be potential because we've got a volume bounce, new day opening gap, fair value gap. This is immediate rebalance on the fair value gap. Plus, this fair value gap has been entered. It's not immediate rebalance on the fair value gap we're looking at here. It's the one that's annotated, this one, because this isn't the one that has just been created. So that's weakness. If we're to break out the consolidation, which we probably are gonna now, coming on to the end of the 11 o'clock hour, trade into these relative equal lows, and then we'll see what launch does. Because we haven't had any one-sided moves recently, like we had them at the beginning of the session, but we haven't had them recently, it's just been consolidating. That 1050 to 1110 macro, where I normally say it's going to retrace on whatever happened, the one-sided move at the beginning of the session, that's not going to apply here. What's it going to do? Well, we're coming out of a consolidation, so 1050 to 1110 should be a spooling event. It's going to trade away from certain levels into certain levels. Which ones? Well, we're trading away from the end dog and this fair value gap into these relatively equal lows and this breakaway gap. So I would look for these relatively equal lows to be taken, and then I'd be done until PM. But it's high resistance, so don't go entering trades based on that. We're in high resistance conditions. And the dollar's plummeting, so Nasdaq should be inclined to go higher, but it's kind of decoupled right now. So I don't trade when it's decoupled. How do I know a consolidation's over? Do I want to see prices even break the consolidation and wait for a retest as top chat? At top chat as a subscriber. What's top chat? Top chat? I don't know what top chat is. Now you don't want to wait for a break and retest because then you're gonna get smoked by ICT traders. Go watch the video on this YouTube channel. It's titled Keys to Trading Choppy Markets. You watch that video, it should clear it up a lot. Generally, you can look for a fade on a break and retest. So you want to see it. This isn't going to be every single consolidation, but some consolidations, when we leave relatively equal highs, we're going to probably trade a little bit lower, trade up into, and then use it as manipulation to trade lower again. As the stream just froze. The stream just froze. I think we're back. Hey, okay. I don't know how to fix that. It happens every now and again. I don't know what it is. I don't know why it happens. Sometimes we just freeze, and then I think it's my internet. I don't know. Hey, where was I? Oh yeah, that delivered. Generally, Nehemiah, when you're looking at consolidations, yes, there's multiple ways to trade a consolidation and to know when you're going to leave it. It's not always going to be the same, so it's not always going to do this exact thing. Sometimes it'll take the highs and then keep trading lower. That's AMD, accumulation, manipulation, distribution. Sometimes it'll use the equilibrium of the consolidation to trade lower because it displaces away from it, which is what we're seeing here. And sometimes it'll outright reverse. But if you watch the video Keys to Trading Choppy Markets on this YouTube channel, that'll answer your questions. About trade management, if I'm confident I won't retrace, I push my stop into profit and don't partial. When I think I'll retrace, I'll take a partial rather and then move the stop to break even. I'm confident I won't retrace. I push my stop into profit and I don't take partials. When I think I'll retrace, I take a partial rather and then move the stop to break even. The thing is, you're so focused on the trade management at that point that it's kind of hard to discern between what's price actually doing. Now you're focused on the trade management aspect. You don't really want to think about trade management when you have to force yourself to be like, oh, what's going to happen here and here? Where am I taking my partials and stuff? It can be distracting, and you don't want to have that. You want to be able to just. I mean, it depends on you. For me, it's like I use some criteria instead. So if we've displaced heavily in my direction and I'm pretty sure it's not going to trade above a certain level, I'll have my stop there. I'll take a partial and I'll keep it cool, keep it chilling, and let it go. Now, if I'm very strongly opinionated in it trading lower, for example, if now I'm thinking, okay, we're definitely going to take out this low, what am I going to do? I'm just going to let it run. I won't even take a partial if I'm really strongly opinionated on that. But you can be wrong, and then you were wrong, but you didn't take a partial, and then that can eat away at you psychologically. So if that works for you, then it works for you, and that's a good thing. Like if you found a trade management system that you're happy with, amazing, keep using it. I don't think that's something that everyone can do though, because they'll get too caught up in trying to manage the trade, trying to over manage the trade rather than trying to look at what's actually happening in the trade. That makes sense. Oh, also, the live streams, they're going to be unlisted now. So if you go into the playlist section on the YouTube channel and you want to watch the live streams, it'll be in the live trading YouTube playlist rather than in the live section on the channel. So you can do that if you want. How do I wait for perfect manipulation? Example, how price reverses to enter the opening range gap and offers buy side delivery. You're asking for like something that takes years to figure out in one answer. I can't give it to you right now, like, this is how you do it, and you'll understand. It takes a lot of time, and the way you can make it easier for yourself is look at one model. Now, when you look at one model, it's very easy to look at where is it manipulating and how do I align myself with this model. So bullet, you can say, okay, well, it took out that relative equal highs, that's manipulation, it's displaced lower, I can enter on that. And that's it. That's all the manipulation you need. If you're looking at the 2025 model, you'd look at the opening range gap quadrants. If you're just looking at raw price action, you're trying to look at everything. And that's not an effective way of learning it. You have to learn one at a time. So start with something like the 2022, 2025, 2024. I mean, any of the mentorships that you want to go through, the models. Stick with that first, and then once you become familiar with that, then look at other things like the opening range gaps and new day opening gaps. That'll help you more. Okay, we'll do your example. How price reverses to enter the opening range gap and offers buy side delivery. So I assume you mean this Judah swing prior to 9:30 and then the buy side delivery. So in this case, we have a very simple thing that I teach here on this channel and in the silver bullet mentorship. When the pre-market low is taken or created at 9:29, 9:30, or 9:31, we have a good chance, if it's a liquidity sweep, of going into the opposite end of the pre-market range. So already at this point in time, you can think, okay, well, it's going to trade higher because we've got the consequent encroachment of this opening range gap. It's displacing higher, and we're looking for the opposite end of the pre-market range. That's here. It delivers that extremely quickly. So there's that concept once again working. It's probably random. And then what's the manipulation here? Well, it's this low. It's a little bit below the daily discount wick from Friday. Consequent encroachment level on that. It's manipulated this low. It's found a support level inside that. And then at the open, it's displaced upwards into the opening range gaps with a full gap. So it's giving you a full gap closure and the opposite end of the pre-market range. That's this 27.26 high. So that move, the manipulation there, you could have anticipated it, or you could have waited for it to occur and then anticipated the setup based on that simple little gem alone. That's one individual setup and one individual type of manipulation. There's lots, and you can't learn them all from one live streamer. It's going to take time, and you can't demand it instantly. Not each model, but some models have different types of manipulation that you can see, like relative equal highs being taken, or Judah swing being created, or discount being entered below midnight opening price when you're bullish. That's the form of manipulation. So there's lots of forms of manipulation that you're going to see in different trading approaches. That's one, and there's others. Whichever model you're going to do, you look at the manipulation that occurs pertaining to that model. So bullet, you want to see relative equal highs swept, or a low swept and then trades into the relative equal highs, etc. Thanks, you're welcome. Okay, I'm not going to wait for this low to be taken. We called most of this, we called the run lower every single part of it. And then we were waiting for the reversal from the macro. I typed this out a lot earlier than it happened, so it was like 9:34 or something. I wanted to see it reverse from a 15-minute breakaway gap like here. It didn't, it traded through it. Then we said if it's going to reverse, it's going to happen. Oh, this breakaway gap. This breakaway gap, we wanted to see it reverse from here. It didn't, and then we said, okay, the next optimal trade entry level. Well, that's here. It traded into that breakaway gap, which is optimal trade entry of this market maker buy model. Now, market maker buy models can form in any market, a bullish market or a bearish market. When it's in a bearish market, it's less likely to take out the original consolidation highs. It's more likely to reverse from optimal trade entry.
We set this as it was happening. If it's going to reverse, it's going to be from this point. And what happens? It reverses. Displaces lower. There's expansion. Consolidates again. Expands through using equilibrium of the consolidation to trade lower. So most of this has been called. It traded higher than we originally anticipated, but then we adapted and said, okay, well, this is where it's going to reverse, if it's going to reverse at all. Another stream, another dollar. Could you please talk about the 5-minute chart? There's no fair value gap, but it left the area efficiently. Should we change time frame from minute 1 to minute 5? Yes. Any comments on how to read price? Do it every single day, and you'll get better at it. If you journal, follow good examples. So, I mean, you don't have to follow me. I learned how to do this from ICT for free on his YouTube channel. So you can learn this from him for free, or you can learn from me, whoever you prefer learning from. It doesn't matter, as long as you're in good company, which here, I think you'll hopefully agree that you're in decent company. just learn it from someone that can do it in a way where you're learning stuff. Even if they end up doing it wrong, well, actually, don't learn from someone that does it wrong all the time. But everyone's going to do it wrong sometimes. As long as you're learning better tape reading techniques like how we did today, if you took something away from this stream, that's good. That's what you should be doing. How to read price, it's experience, it's time, it's doing it so often that it becomes second nature, and you're familiar with multiple models and multiple ways to read it based on narrative, intermarket relationships, high time frame biases, weekly biases, daily biases. All of that plays a real factor, and yeah, come away from indicators, just use open, high, low, close charts. You'll be fine. But that is going to conclude today's stream. It's been a pretty good one. Good energy today. Nearly 2 hours, which is longer than I normally stream. I normally go for like 1.5 or just 1. In fact, shall wait for this low. We'll let this candle close and then I'll end it, because I want to see if this low gets taken. Let's look at the reversal though. 950 to 1010 macro. Random. Macros aren't real. Macros aren't real. There's likely no look. Oh. You're replying to him. Nine, 8, 7, 6, 5, 4, 3, 2, 1. Volume bounce. No. Okay. I'll give you 30 seconds and then I'll go. Hey. Hey. Random. Okay, I'm off. Yeah, I'm going. Thanks for watching. Hopefully you came away with something, and I will be streaming again on Wednesday, not tomorrow, Wednesday and Thursday. Tomorrow's the private mentorship stream, so see you then.